we talked about why asset allocation is key to protecting and growing your wealth. Today, we are going to figure out your best mix. Hi, I'm Erika. Welcome back to Lazy-Dividend-Life. I'm an income investor who's built a portfolio that lets me live off dividends and spend my time freely. I'm not a financial guru or a Wall Street trader, just a regular person who built a portfolio that pays me enough to cover my life. So, what is risk tolerance? It's basically how much risk you can handle, both financially and emotionally, without panicking. Your profit portfolio depends on this. If you take too much risk, you might sell at the worst time. Take too little, and you might not reach your goals. That's why I recommend starting with a free online test, like the investment risk tolerance calculator. The links are below. It asks simple questions about how you react when markets drop, your time horizon, your income stability, your investment goals. Once you know your score, you can match it to a suggested mix of stocks, bonds, and other assets. Okay, let's start the test together now. First question: how old are you? I'm 35 to 49. Next, how do you expect your income will change in the next few years? I think the dividends will increase slightly. And another, when you hear risk, what do you associate it with? Uncertainty. How long do you plan to keep money in long-term investments? Over 8 years. That works for my plan. Try the test with me and share your results in the comments. I'd love to see them. Yeah, I've finished. What was your score? My score shows I'm moderate risk. This tells me I can handle some fluctuations, but I still want stability. Here's something important. Most risk tolerance tests just give you a split like 60% stocks, 30% bonds, 10% cash. But in an inflationary world, bonds don't always protect you. That's why I like to add a small slice, maybe 5 to 10% in hard assets like gold, commodities, or wheat. They help balance the portfolio when inflation eats away at bond returns. And one more thing, I also like real estate crowdfunding platforms like Fundrise or CrowdStreet. They act a little like bonds, paying steady income, but they are backed by real estate, not debt. That gives me another layer of diversification and protection. And remember, risk tolerance isn't fixed. It can change with your life stage, your health, or even your confidence as an investor. I recheck mine every few years. Next time, we'll take this a step further, building some sample portfolios that match different risk profiles. So subscribe if you haven't yet, and let's grow your income and peace of mind the lazy way. Thank you for watching. See you in the next video. Bye!